All right, another day, another highlight. Today, I'm not going to show you this on the chart. I'm just going to walk you through it. It's 3 steps that happened near the temporary highs. I say temporary highs because I don't want people to try to call highs and lows. Call temporary highs or lows. It's too much pressure. Oh, this is the high of the day, this is the low of the day. You don't know that. But you're trying to find turns. And we predicted that it could turn there. Be careful getting long up there, maybe cover along, or be careful opening along, um, based on what we had seen in our puke tool, which is over here. And I don't want to get into a definition and description of the puke tool. I just want to walk you through 3 steps of why, when you have a confluence of things, you could call a temporary top or bottom in a particular market. Let's talk about the top, because just after 9 Central, we had this. And I can't pull this chart back, but 3 things happened about 9:06 this morning Central Time in the S&P. First off, we had rallied into an area that we're always looking for turns. Even if you're not fading and trading turns, you're always still looking for turns, right? You could be getting out of a position from below and you're looking for a top. So we're always looking for tops and bottoms, whether you trade them or not. So the first thing is we rally into a particular area, but we've seen a couple things, and this is all order flow driven. First thing we seen, I don't know if it was first, but one of the things we seen was a buy side iceberg order. What is an iceberg? Iceberg is a buy or sell order. In this case, it was a buy order that is buying more than he's showing. He was showing, let's say, 25 contracts, but by watching it and identifying it, he hadn't go away. The order ID doesn't go away, so we know it's an iceberg. How many does he have? We'll know once he's done, but we don't know. He just has more. So he could have filled 100, showing 25. And then when the line is cut off, it's a green line if it's buyers, it's a red line if it's sellers. When the green line stops, that means he's out. So what had happened here at the top is a green line came in and he got filled right away. What does that mean? When a lot of buying comes in and an iceberg's a resting order, this case, a resting buy order, limit order, he came in, showed 25, got hit for, I think it was 100 or 200 right away. The tempo of in the manner of a buy order or sell order getting filled is a really important element to order flow and reading it and understanding it. When a buy order comes in and it quickly gets filled, it's what I call an appetite for selling. There's an appetite for selling when a buy order is there and he gets hit right away. It's not just that you've seen it, it's how fast it gets filled. Does that make sense? You could do this when you're reading anything out in life, right? If you walk into a bar and everybody runs to you, there's an appetite for that person. If there's, so it's the tempo which how quickly an order might get filled. So that was one thing that happened at the top. This was just after 9 Central. The other thing was over here we had shorts that puked. Without getting into a long definition of shorts puking, it's quickly when you have shorts in the market, that means they think the market's going to go down. But if the market doesn't go down, at some point they got to get out. And shorts have to buy to get out of that position, right? If you're short, you're a buyer. Well, if enough of them say screw it and buy it, we call that shorts puking. Puke is a slang word for exiting a position. In this case, exiting a short position. So a bunch of buying comes in with buy stops. We're able to find out that it's a buy stop. And when people use a buy stop, typically the most popular use of a buy stop order is to exit a short position. Write that down. The most popular use of a buy stop order type is to exit a short position. Now, I didn't just reinvent the wheel with that definition, but understand that. And if you understand that a buy stop exit short position, and when you see a red bar stick out like it shows on our screen here, that's shorts puking. The reason why we have it red is because we're trying to follow the positions that are exiting. We could sit back and say it could be green because it's buy stops. No, it's not as intuitive as we want it. So red is shorts that puke because a bunch of buy stops came out. That doesn't mean we're going to go straight down, but it's just another factor that helps it go down. And you might say, why? Why are shorts puking synonymous with a turn and maybe a move lower? Here's why. What happens when a bunch of people who have to buy it, remember shorts are buyers, right? When you're short, you have to buy it at some point. What happens when a lot of them buy it? They say, screw it, I'm out. There's less buyers below. And if there's less buyers below in any market, in any product, it has just an easier chance to go down. There's less trees in the way. There's now a path. Less buyers, easier path lower. Well, how do you get to that point of less buyers? Well, you squeeze them out and you get that short puke dynamic to play out. And that's what we have over here. Okay. So now you had two reasons. An iceberg buyer came in, got cracked right away. So there's an appetite for selling. Buy stops came in to puke some shorts. So there's less buyers below. Then a third thing happened. And you see it in here with these purple rectangles is a aggressive buy order. It shows you inside the box what size. It was 100 lot. So anything 100 or more will have a purple box for a buyer and a red box for a seller, and the number of how much they buy or sell. There's a $1.25. Why is that important? Well, look what just happened here. Shorts puke, big buyer comes in, and it's already come 4 ticks off of there. It might go more, but you know that here, instead of having to wait down here, shorts puke, got squeezed, buyer came in. When a big buyer comes in, if it's a purple box, he's aggressive. He goes to the market. You use a market order to maybe get in or maybe a buy, you're aggressive, right? You're not going to play around. You're not going to be patient. When you put a buy market order in, you want that price now. And now if you do it for 100 or more, you're going to show up here. Well, what does that mean? Well, a big order that comes in and buys the offer, if price doesn't go up, it's like punching a guy in the face and he doesn't blink. He doesn't forget about falling down. He doesn't blink. I'm running the other way. And so does price. And you just seen it as we were talking. Big buyer come in 125 and shorts puke. That's 2 of the 3 things I'm walking you through. There was no iceberg in this particular example. And so the whole point is now you have order flow. You have the questions to ask when reading order flow. Does a big buyer move price up? You have different variations of it, but you have the most important element in this explanation of all, and that is why. Why would shorts puking make it maybe go lower? Well, because there's less buyers now. Less shorts, less buyers. Less buyers, price always could go down easier. Why is a big buyer that comes in and aggressively buys the market and it doesn't rally? Why is that indicative of downside? Well, because punch a guy in the face and he doesn't blink. Tell me what happens. Price is defending at that point, absorbs that big buy order. And then lastly, an iceberg who's a patient buyer gets filled right away. He's a big order and he's patient. Either way, bam, he comes in and he gets filled. Any of you guys that have trading floor experience, I started my career on the floor and then transitioned to a prop firm about 4 years into my floor career. But anybody in the floor that come from the pits could remember one thing. If someone bid, 3 for 100 and everybody jumped on him, sold, they would yell. You knew he was probably, the market was a little bearish. He probably bid into an offer, or there was an appetite for selling when the volume spiked, correct? Not the volume and number of contracts, the actual audio volume. And that's what happens when you see an appetite for selling with an iceberg that quickly gets filled. So it's not just the recognition of buy orders, it's how quickly they get filled is important. And a lot of people miss that. Now here, it calls that, like I said, temporary tops. Don't come in here and say, well, we had shorts that puke and a big buyer, it's going to go down forever. No, you got to get good at calling the first few points before you call the next few points. And then you can't be stubborn to think you're always right, that that's the high. It's just temporary. Continue to think temporary. You'll be less stubborn. Unless it's about your marriage. I don't think you want to tell your wife that this is just temporary, honey. That might not work as well. But try it. Let me know how that leave a comment on how that worked out for you. Either way, stay safe, keep yourself healthy, subscribe to this channel, and make sure you know what questions to ask when you identify order flow. Make sure they're the right ones.